Hey there, gold bugs. Whether you're a seasoned investor or just starting out, the allure of gold is timeless. It's not just a shiny metal, it's a symbol of wealth, security, and even power. We all want to unlock the secrets of the gold market, right? The ups and downs, the trends, the perfect moments to buy and sell. It's like a never-ending puzzle. Well, believe it or not, some ancient texts have surprisingly relevant tips. These aren't just dusty old books, they're treasure troves of wisdom that can be applied even today. I'm talking about the Yijing and the art of war. These texts have been guiding strategists, leaders, and thinkers for centuries. These Chinese classics are all about strategy, understanding cycles, and outsmarting your opponents. Imagine applying these age-old strategies to modern financial markets. Sound familiar? It should, because those are the keys to winning in the markets too. The Yijing, or Book of Changes, teaches us about the ebb and flow of energy. The Yijing, or Book of Changes, teaches us about the ebb and flow of energy. It's a profound text that delves into the natural rhythms of life, which can be surprisingly similar to market cycles. It's all about adapting to changing circumstances, just like in the markets. The ability to pivot and adjust your strategy based on new information is crucial. One day, gold is up. The next, it's down. The market is as unpredictable as the tides, and understanding this can help you stay ahead. You got to flow with it. Embrace the volatility and use it to your advantage. Then there's The Art of War by Sun Tzu. This isn't just a book about warfare, it's a guide to strategic thinking. This book is a masterclass in strategy, emphasizing knowing your enemy and yourself. In the context of trading, your enemy could be market forces, competition, or even your own emotional biases. In trading, that means understanding market forces and your own risk tolerance. Knowing when to strike and when to hold back can make all the difference. Now, I'm not saying to ditch your charts and technical analysis. These tools are invaluable, but they can be complemented by ancient wisdom. But adding these ancient principles can give you an extra edge. Imagine combining modern technology with timeless strategies. It's like having a secret weapon. Trust me, understanding these concepts can help you anticipate market shifts and make smarter trades. It's about seeing the bigger picture and making informed decisions. We're going to dive deep into how these age-old strategies can help you navigate the gold market like a pro. Stay tuned as we explore the fascinating intersection of ancient wisdom and modern finance. Let's cut to the chase. For us gold traders, $2,700 is the magic number. That's the level gold needs to break through for a significant bull run. The Yijing teaches us about the importance of momentum. Think of it like pushing a boulder uphill. Getting it moving is the hard part, but once it gains momentum, watch out, that's gold at $2,700. Once it breaks through that resistance, we could see a powerful surge upward. But remember, the art of war reminds us that no battle is won without a plan. Don't just blindly chase the momentum. Have an exit strategy in place. Know your profit targets, and more importantly, your stop-loss levels. In the opening of the week, gold prices find themselves under pressure, struggling to stay above the $2,558 mark. The market sentiment is mixed, with the US dollar rally pausing, and the resurgence of Treasury bond yields adding further strain. According to the principles in Yijing, this situation mirrors hexagram 23, splitting apart, where forces are pulling in different directions, yet the situation is not yet final. The self-correcting forces of the market are at play. Gold falters as external pressures such as China's economic data and inflation fears build. Sun Tzu would advise seeing this moment as one of restraint. If your opponent is of choleric temper, seek to irritate him. The market volatility is akin to a momentary pause before a more decisive move. Now let's talk Treasury yields. These are crucial indicators in the financial world, often dictating the flow of investments and the overall market sentiment. These yields are like the annoying little brother of gold, always causing a stir and demanding attention. When yields go up, gold often goes down. This inverse relationship is a fundamental concept that every investor should understand. Why does this happen? Well, higher yields on bonds make them more attractive to investors. Bonds offer fixed returns, which can be quite appealing, especially when yields are high. This draws money away from gold, which doesn't offer those juicy yields. The art of war tells us to know our enemy. In the financial battlefield, understanding the dynamics of Treasury yields is crucial. In this case, the enemy is rising yields. They can signal a shift in market conditions affecting various asset classes, including gold. But remember, Sun Tzu also said, keep your friends close and your enemies closer. This wisdom applies to the financial markets as well. Don't fear rising yields. Understand them. By comprehending their movements, you can make informed decisions and navigate the market more effectively. Keep a close eye on the 10-year Treasury yield. This particular yield is often seen as a benchmark for economic health and investor sentiment. If it starts to cool off, that could be a bullish sign for gold. A cooling yield might indicate a shift in investor preference back to gold, which can be a safe haven in uncertain times. By tracking these yields and understanding their relationship with gold, you can anticipate market moves and position yourself for profit. Knowledge is power, and in the world of finance, staying informed is your best strategy for success. What does the behavior of gold prices tell us about market control and timing? We all know China is a major player in the gold market. They love their shiny metal. So when their economy sneezes, the gold market catches a cold. Lately, China's economy has been a bit shaky, which has put pressure on gold prices. But hold on, the yijing is all about seeing the opportunity in every change. A smarting Chinese economy might seem bearish for gold in the short term, but here's the twist. It could lead to more stimulus measures from the Chinese government. And what do they often turn to when they want to boost their economy? You guessed it, gold! So keep a close eye on China. Their actions could create some exciting opportunities for savvy gold investors. What is the importance of controlling the narrative in such uncertain times? Politics, can't live with it, can't trade gold without understanding it. The US political landscape can make a big splash in the gold market. Remember, the art of war emphasizes knowing your battlefield. And in this case, the battlefield is Washington, D.C. Uncertainty and instability often make investors nervous, and when they get nervous, they run to safe havens like gold. Keep an eye on US elections, trade deals, and any geopolitical drama. These events can create volatility, and volatility, my friends, is where the real opportunities lie. The US inflation week begins with gold being tested below the critical $2,558 level, even as Treasury bond yields are rising again. From a yijing perspective, this situation recalls hexagram 51, the arousing shock, where a sudden shift in external conditions causes instability. Traders are adjusting their positions as a reaction to the rise in bond yields combined with ongoing concerns about China's economy. Sun Tzu suggests, all warfare is based on deception. Market movements often mislead the unprepared. Thus, understanding when to act decisively or remain passive becomes crucial. The pause in USD strength only heightens the uncertainty, demanding that investors carefully measure risk. How can geopolitical factors shape the fate of gold and risk sentiment? The Middle East is like a box of chocolates. You never know what you're going to get. This region is a complex tapestry of cultures, politics, and economies, each thread interwoven with the others in intricate patterns. The unpredictability of this area can be both a challenge and an opportunity for traders and investors alike. Unfortunately, that box often contains geopolitical tensions and conflicts, which can send shockwaves through the gold market. These tensions can arise from a variety of sources, including political instability, military conflicts, and economic sanctions. Each of these factors can have a significant impact on the price of gold as investors seek safe havens during times of uncertainty. Remember, gold loves a good crisis. The yijing teaches us to be adaptable, like water. Just as water flows around obstacles, traders must learn to navigate the ever-changing landscape of the Middle East. This means staying informed about current events and being ready to adjust your strategies as new information becomes available. When tensions rise, gold often rises with them, so keep an eye on the news coming out of this region. Pay attention to key events such as elections, military actions, and diplomatic negotiations, as these can all influence the market. By staying informed, you can better anticipate potential changes in gold prices and position yourself to take advantage of these movements. As US politics and geopolitical tensions unfold, particularly with the looming uncertainties of the Middle East and China's debt package, gold's path remains under pressure. Yijing's hexagram 29, the abysmal, is a fitting symbol here. It refers to navigating treacherous waters where risks are high, but the potential for reward exists for those who manage their course with wisdom. The US-China tensions, coupled with the geopolitical calculations in the Middle East, keep market participants in a state of waiting for clarity on both inflation data and the broader political landscape. Any flare-ups could send gold prices soaring. Even a minor incident can have a ripple effect, causing significant fluctuations in the market. Therefore, it's crucial to monitor not only major events but also smaller developments that could escalate into larger conflicts. But remember, the art of war cautions against acting impulsively. Sun Tzu's wisdom teaches us the importance of careful planning and strategic thinking. In the context of trading, this means not rushing into decisions based on initial reactions to news headlines. Don't just jump into a trade because of a headline. Take the time to analyze the situation thoroughly. Consider the broader context and potential long-term implications of the event. This will help you make more informed and strategic decisions. Sun Tzu tells us opportunities multiply as they are seized. Investors who understand when to act based on the evolving political and economic narratives can find opportunities where others may hesitate. Assess the situation, consider the potential impact, and then make your move. This approach will help you navigate the complexities of the Middle East market more effectively. By being patient and strategic, you can better manage risks and capitalize on opportunities. Being informed and strategic are your best weapons in this volatile landscape. Stay vigilant, stay adaptable, and always be prepared to adjust your strategies as new information emerges. In this way, you can turn the challenges of the Middle East market into opportunities for growth and success. What role does the consumer data and inflation reports play in market psychology? Inflation, the gold predictor? Inflation, inflation, inflation. It's the buzzword on everyone's lips, and for a good reason. Rising inflation can be a gold bug's best friend. Why? Because gold is seen as a hedge against inflation. When the cost of goods and services rises, the purchasing power of paper money erodes. But gold? Gold holds its value over time. The yijing encourages us to look for patterns and cycles. Historically, gold has moved inversely to the dollar. So when the dollar weakens due to inflation, gold tends to strengthen. Keep a close eye on those inflation numbers, folks. They could be your crystal ball into the future of gold prices. The upcoming US inflation data and retail sales numbers will reveal the true health of the economy and provide further insight into the Fed's next steps. Yijing's hexagram 39, obstruction, speaks to the need to push through barriers, whether in economic growth or market expectations. The market's reactions to these economic signals will reveal the paths ahead. A soft CPI print may ease pressure on yields benefiting gold, while a hot report could turn the tide in favor of the USD. Sun Tzu suggests, know your enemy and know yourself, and you can fight 100 battles with no danger of defeat. To navigate these turbulent conditions, investors must understand both the macroeconomic forces and the subtle shifts in market psychology. How can market participants maintain composure amidst high volatility? Powell's crystal ball and consumer clues. Jerome Powell, the big kahuna himself. The Fed chair's words can move markets, and that includes gold. When Powell speaks, we listen. The art of war emphasizes the importance of intelligence gathering. Pay attention to the Fed's statements and their outlook on interest rates and inflation. These pronouncements can give you valuable clues about the future direction of the economy and, by extension, gold. But here's a little secret. Don't just listen to what the Fed says. Watch what consumers do. Consumer spending makes up a huge chunk of the US economy. If consumers are confident and spending freely, that's usually a good sign for the economy, which could mean a dip in gold prices. Finally, the heightened volatility surrounding the Christmas holiday and potential market shocks presents a scenario where patience and strategy must align. Yijing's hexagram 18, work on what has been spoiled, reminds us that even in moments of disarray, there is value in reforming and adapting rather than yielding to panic. Sun Tzu's counsel here would be to do not press a desperate enemy. In the market, this means avoiding rash moves during uncertain times and positioning oneself for longer-term opportunities, particularly with upcoming data points such as the US CPI and retail sales. So there you have it, folks. We've journeyed through ancient Chinese wisdom and applied it to the modern gold market. Remember, the yijing teaches us to embrace change and adapt to the market's ebb and flow. And the art of war reminds us to be strategic, knowing our enemy, market forces, and ourselves, risk tolerance. By understanding these principles and keeping an eye on key indicators like US dollar trends, Treasury yields, and China's economic activity, you can position yourself for success in the gold market. Remember, folks, knowledge is power, and in the world of finance, that power can translate into some serious profits. Now go forth and conquer those markets. We have observed that it is not only possible to combine ancient Eastern wisdom with modern financial strategies, but it is also entirely feasible. This fusion represents a revolutionary approach. From embracing change to finding the right balance between empathy and determination, these principles provide a refreshing perspective on business management. Therefore, let us remain optimistic. These timeless yet relevant strategies can help businesses to thrive. The importance of balance and strategic thinking cannot be overstated. The key is to find the ideal equilibrium and maintain agility, much like a tightrope walker with a safety net. To successfully navigate the future economy, it is essential to adopt careful, intelligent strategies that emphasize balance and adaptability. The current global market situation is complex. It is a mixture of favorable and unfavorable conditions, presenting both opportunities and risks. The environmental resources of each region on Earth are distinct due to their unique latitudes and longitudes. We can summarize real-time opinions by using advanced artificial intelligence technologies, such as neural networks, which take into account regional characteristics and national economic data. By watching our videos each week, you can stay well informed with minimal time investment, gaining valuable insights that will enhance your life in many ways. To succeed in these volatile financial environments, it is crucial to remain adaptable and avoid unnecessary risks. No matter your level of investment experience, it is important to keep an eye on our video releases to make more informed decisions. Remember, knowledge is not only a tool to enhance your value, it is also a form of power. If there are any topics you are interested in, feel free to leave a comment. As we conclude this episode, I would like to extend my sincere gratitude to all of our viewers for their continued support. If you found today's video helpful, please like it so that you can easily return to it when needed. Thank you for your attention and support.